They say the window is closing, but most people are looking at the wrong clock. Welcome back. I am the Quiet Analyst, BHW. Today is January 16th, 2026, and while the retail market is distracted by short-term price fluctuations, a massive structural shift has just occurred behind the scenes. This isn't about hype, it is about the transition from begging for permission to becoming the standard. Ripple has just secured its EMI license, a move that grants instant continental scale across all 27 EU and EA countries. This isn't a one-country-at-a-time expansion. This is the keys to an entire continent's financial plumbing. With over 75 regulatory approvals globally, we are no longer watching a crypto company. We are watching the construction of a global sovereign infrastructure. But here is the quiet part that no one is discussing. As of January 15th, the LMAX Group has officially integrated RLUSD, Ripple's stablecoin, as collateral within their institutional trading framework. This means hedge funds and Tier 1 institutions are no longer just looking at Ripple. They are using it as the foundation for their margin efficiency and spot trading. When an asset moves from a speculative token to essential plumbing, the demand stops being optional. We are currently looking at a massive liquidity gap. While Bitcoin ETFs are moving $5 billion daily, XRP-related products are averaging only $30 million. Ask yourself, what happens to the price of a bridge asset when that gap starts to close? What happens when the giants like BlackRock KK and Fidelity decide that the infrastructure is finally ready for their volume? The window isn't closing because the price is too high. The window is closing because soon you won't be able to buy infrastructure at retail prices. Stay sharp, stay positioned, stay quiet. Pause. To understand the magnitude of today's developments, we must look beyond the term crypto and start using the term sovereign infrastructure. Pause. The announcement that Ripple has secured its EMI, electronic money institution license, is not a minor regulatory win. Pause. This is a strategic masterstroke that grants Ripple the legal authority to scale its payment solutions across all 27 EU member states plus the EA. Pause. Most companies in this space are forced to fight for adoption one country at a time, navigating 27 different sets of local hurdles. Ripple has bypassed that entire friction point. By securing this license, they have achieved instant continental coverage. This brings Ripple's total to over 75 regulatory approvals globally. Pause. Let that number sink in. In the early days of this industry, companies were begging for permission to exist. Today, Ripple is no longer asking to participate in the financial system. They have become a core component of it. When you hold 75+ global approvals, you are no longer a startup facing regulatory risk. You are the golden ticket. You are the compliant bridge that traditional institutions have been waiting for. We saw this reflected in the recent statements by Stuart Aldero, Ripple's chief legal officer. His message to the U.S. Senate wasn't one of frustration or protest. It was a calm, professional observation. We are already compliant. The rest of the world is moving forward. It's time for the Senate to act. This is the sound of confidence. You don't speak with that level of clarity unless your legal and operational foundation is unbreakable. Ripple is leaning forward, not backward. They have realized that infrastructure doesn't stay cheap once it is fully licensed and operational. While the retail market waits for a signal from the price charts, the real signal is the regulatory moat that is being built around Ripple's technology. Once you are integrated into the financial plumbing of an entire continent, your utility is no longer a theory. It is a geopolitical fact. The window is closing because the risk is being removed. And in finance, when the risk is removed, the retail entry price usually disappears with it. Stay sharp. Stay positioned. Stay quiet. While the headlines are focused on licenses, the smart money is looking at the plumbing. On January 15th, a development occurred that fundamentally changes how liquidity flows through the institutional markets. The LMAX Group, a powerhouse in institutional trading, has officially integrated RLUSD, Ripple's USD peg stablecoin, as collateral across its entire infrastructure. For the average retail investor, a stable coin is just a way to hold value. But for a hedge fund or a Tier 1 institution, a stable coin like RLUSD is fuel. By using RLUSD as collateral, these institutions can now cross-collateralize their positions. They can move between spot perpetuals and CFDs with a level of margin efficiency that was previously impossible in the traditional siloed markets. This isn't retail adoption. This is structural integration. When we talk about the plumbing, we are talking about the invisible pipes that move trillions of dollars every single day. Once XRP and RLUSD are embedded into these pipes, the demand for these assets stops being a matter of opinion or hype. It becomes a matter of operational necessity. Think about it. If you are a major trading desk and you can improve your capital efficiency by even 1% by using Ripple's infrastructure, you are mathematically obligated to use it. In the world of high finance, 1% is the difference between leading the market and being obsolete. This is why Brad Garlinghouse remains so focused on clarity before chaos. The institutions aren't looking for a quick trade. They are looking for a predictable environment. They need to know that the plumbing they are building their multi-billion-dollar businesses on won't be ripped out by a sudden regulatory shift. With Ripple's 75+ approvals and the launch of RLUSD on institutional rails like LMAX, the predictability is finally here. We are seeing a convergence. RLUSD provides the stable value while XRP provides the high-velocity bridge for settlement. Together, they form a double threat to the legacy payment systems that rely on slow, expensive, and opaque pre-funding models. The legacy world is still using mules to move value across borders. Ripple has just finished laying the fiber optic cables. And as the LMAX press release from January 15th confirms, the switch is being flipped. Your hedge funds and your institutional clients are now plugged in. When the volume starts to move through these institutional pipes, it won't look like a retail pump. It will look like a tidal wave of liquidity. Stay sharp, stay positioned, stay quiet. Let's look at the cold, hard numbers. The data points that the retail crowd often overlooks while they are staring at 1-minute candle charts. Stay quiet. To understand where XRP is going, we must look at where Bitcoin has already arrived. Stay quiet. As of early 2026, Bitcoin ETFs, managed by giants like BlackRock CK and Fidelity, are moving an average of $5 billion in daily volume. Stay quiet. This is what happens when an asset achieves institutional awareness. Stay quiet. Now look at XRP. Despite its massive regulatory clarity, its related institutional products are currently averaging only $30 million a day. You are looking at a gap of nearly 160 times. But here is the fundamental difference that most people miss. Bitcoin is treated as a store of value, digital gold. It is bought to be held. XRP, however, is a bridge asset. It is designed to be used. XRP doesn't just store value, it settles value. It is being plugged directly into the global banking infrastructure, the FX markets, and the $150 trillion cross-border payment rails. When institutions like Morgan Stanley, Goldman Sachs, and VanEck fully integrate XRP into their index funds and ETFs, that liquidity won't trickle in. It will rush in. Why? Because unlike Bitcoin, which relies on demand for gold, XRP relies on the demand for efficiency. The big names BlackRock, CK, and Fidelity are currently watching from the sidelines. They are observing the early movers like Franklin Templeton, Bitwise, and Grayscale. But as soon as the clarity becomes certainty, these giants will be forced to enter to protect their own market share. Institutions do not panic sell. They position, they average in, they hedge, and they wait. And while retail is waiting for a polite entry price, the institutions are busy building the pipes. We are also seeing this pattern in other Elite 8 assets like Chainlink. As more issuers stack these assets into reserves for their ETFs, we are approaching what economists call a supply shock. The amount of liquid XRP available on exchanges for retail will dwindle as institutional custody takes over. In 2017, retail moved the market with pure emotion. In 2026, institutions move the market with systemic necessity. One day, you will wake up and the price won't be at $2 or $3. It will have moved to reflect its role as the infrastructure of global finance. Most of the population doesn't understand this yet. They don't understand that SBI, Bank of America, and Visa aren't just testing this. They are deploying it. By the time the mass majority realizes the difference between storing value and settling value, the window for retail-level entry will have slammed shut. This isn't about being early anymore. It's about not being late. As we close this briefing, I want you to step back and look at the larger pattern. Today, January 16th, 2026, we aren't just discussing price movement. We are discussing the institutional capture of a global financial standard. The licenses in Europe, the integration with LMAX, the steady growth of the XRP ETFs, these are not random events. They are the final stones being laid in a bridge that will carry trillions of dollars in value for decades to come. The reality is that infrastructure doesn't wait for permission. It doesn't wait for retail to feel comfortable. And it certainly doesn't wait for the perfect entry price. Most people will wake up one day and ask, how did XRP reach these levels? They will look for a single headline, but they won't find one. Because this isn't a pump. It is a systemic upgrade. The window for buying infrastructure at retail prices is slamming shut as we speak. You deep down understand the value of what Ripple, SBI, and the global banking consortium are building. You understand that XRP is solving the world's most expensive problem, the friction of value. The noise is loud, but the signal is quiet. Make sure you are on the right side of the liquidity flow. Stay sharp, stay positioned, and always stay.